नहीं अभी भी नहीं आ रहा. Okay, done. Thank you. Okay, so let's begin with the class. Audible clearly now? Thank you so much, Avan sir. So today I'm going to talk about deal structuring and financial strategies. Now, what are these deal structuring things? Okay, I might be buying your organization and I might be looking forward to it. Ki, Acha, can I give you shares or shall I pay you in money? Right? Sorted. Kar diya. Done? So when we talk about the entire scenario, deal structuring is the last chapter of module C. So after we are completed with module C, then we'll start with the last module, that is module D. I hope you have been following me. I have covered most of the, module A was completely done, module B was completely done, module C is almost done now, and then we'll move towards module D, and then we will have complete marathons, mini marathons, so that we can prepare well for this examination. ABFM has one of the major reasons which is making it difficult, that is the hardcore conceptual area that it has brought in. So those conceptual things requires an understanding. There are certain paragraphs you have to read it twice. Ki, Acha, what exactly this particular paragraph is saying, because there are too many financial terms in this, right? So keeping all these things in mind, here comes the first question. When deciding on acquisition vehicle or the post-closing organization, it is necessary to take the consideration of the elements except cost and level of formality involved in the organization, ease in which the ownership can be transferred, the continuous existence of the organization, or profit of the organization. What would it be, everyone? Whenever you buy an organization, you have just bought an organization and they are talking about post-closing. During the situation of post-closing, what would be the particular thing that you might be considering and which is very, very important? What is that specific thing which is very, very important? All, I would say, the cost and the formality of involved in the organization, you are paying a hefty amount for this. So obviously, this is a particular situation where you would say, this amount is super duper important. Cost and level of formality. Then the ease which the ownership can be transferred. This is also very important because you are buying some other organization. You want to know what's happening there. The continuous existence of the organization, it has to exist. If it is not existing, then what was the fun of going through all that acquisition? And the last one is profit for the organization. This will happen after they have made money. So these three above are correct, but the last one isn't. So the answer in this question is profit for the organization. That is D. Done? Next part. Which of the following is correct? Among the following, which one is correct? When the primary form of payment for acquisition is acquirer stock, the transaction is exemption from tax. Transaction may be subjected to exemption if the shareholders of the target company receive something other than the acquirer's stock in exchange of their shares. When the primary form of payment for the shares is acquirer stock, the transaction is partially tax from taxation. Okay, the point is, if I, in case of amalgamation, not taking anything else, because in terms of amalgamation there are certain exemptions. There were two companies, A and B, right? They decided to become AB. After the merger, it has now become AB. Now, when we are looking at AB, everyone, what is happening with AB? In terms of A shareholders are now a shareholder of AB, then B's shareholder are also a part of AB. Now, what did they get? They are not selling their shares. Their shares are just exchanged. Earlier, they had shares of A. Now, they have shares of AB. When only this thing is happening, not even a single rupee is given to these people, then it is not taxable. The moment you make a payment, it becomes taxable. Partially taxable till the time it is partial payment. When there is complete payment, Capital Gains of Income Tax Act 1961 is basically attracted to it. Then it starts with the particular section of section 45 of Income Tax Act 1961. So this is where the entire income tax comes into the view. And it will say you are acquiring an organization. If it's just an exchange, we do not put tax on it. But the moment there is a movement of other than shares, that is the moment when we are going to tax it. We're going to put tax on it. Okay? So in this case, the correct answer would be, there is only one point correct. It is exempt from tax only if you are getting stock. Stock here is not goods. It is actually the securities. Okay na? Done everyone? Acha, another question. This question says the non-equity consideration for acquisition of a company is bootstrap, share or trading on equity. Bootstrap is using your own money to keep you floated in the market. Shares is securities. Trading on equity is sometimes we do not opt. It sounds like we are having equity, but it's like not opting for equity because equity costs us voting power. Why would we lose voting power? So it's way better that we do not lose our power. We just go for boot. This is the non-equity consideration that they are receiving is called boot. Small, minute financial terms, but plays a very important role. Okay, here comes the section under section 47 subsection 6 of the Income Tax Act 1961. Assertion is capital gain arising from the transfer of assets by the amalgamating company to the Indian amalgamated company is exempted from tax. Reason: transfer will not be regarded as a transfer for the purpose of capital gains. Do you know, as per Income Tax Act, there are certain things to be called as transfer in order to get taxed. If it is not considered as a transfer, there won't be tax on it. That's actually correct. This is the particular point which they specify. They say that in this area, both assertion and reasoning are correct. Both A and R are wrong. Both A and R are correct and R is the reason, or none of the above. I would say in this case, one particular thing is clear, that both are correct. But is the reason is in context with assertion? It is. In this case, the correct answer is both A and R are correct and R is the correct reason. Okay? Both A and R are correct. Done? Chaliye, moving on to the next question. Which section of Income Tax Act 1961 deals with the tax implication of amalgamation? 234, 284, 72A or 190? Achha, when we talk about 234, 284, these are going with the area of appeals and all. When we come to section 72A, this is related to the area of amalgamation. Choti cheezein, it's very important that you learn a few important sections. I would never say ki cram each and everything from the ABFM book. Ultimate truth is you won't remember even a single thing if you're trying to learn everything. There's a particular thing that we do in controlling. I believe you must be remembering it in terms of MBE. When you try to control everything, you end up controlling nothing. The moment you are trying to cram the entire book, ye bhi yaad kar lenge, I learned this one, I learned that one, you will remember nothing. But if you remember the core points and understand the other conceptual areas, you will never be losing it. Because one of the bad ways of learning is that people believe that it's better to cram. Or let's learn an MCQ as well. This might be the MCQ that is coming in the examination. So it's way better to not to have that kind of view, but have a view of understanding. The section 72A is related to the area of amalgamation. Acha, now comes under section 72A, what is it? under section 72A, what is the condition for carrying forward and set off of accumulated losses and unabsorbed depreciation in case of amalgamation? What is it? First is continuity of business. Second is discontinuity of business. Third is ignoring business operations. Fourth is change of business domain. 72A says that the losses of the previous organization, the one which existed before amalgamation. Matlab, there are A, B and AB. If there was any loss of A, it can be carried forward by AB. Why? Because AB gave its shares to the people of A and didn't pay or receive even a single rupee. What happened was, whatever belonged to the company A now is a part of company AB, and shares of the shareholders of the company A received shares only from company AB. There is no movement of cash, there is no payment of cash. It is just an exchange of shares of A to shares of AB for the shareholders. So in this case, they are not making any money out of it. So in this case, even if A has seized, all the assets, all the liabilities of A are now part of AB. That means all the assets bearing liabilities, all the liabilities which they had to pay are a part of AB. So all the losses which were carried forward by A are now belonging to AB. This is as per Income Tax Act. But provided, again repeating, there should not be movement of any money in this. So this would be there only if there is a continuity of business. Done, everyone? That is continuity. Next question. Under section 72, in the amalgamation, there is one point there. In the amalgamation, what is the treatment of shareholding of the amalgamating company? The one which is, there are two companies, two set of companies. One is A, one is B, one is AB. है ना? This is amalgamating. Both of these are amalgamating companies, while this one is amalgamated company. Found the difference, everyone? Now we are going to talk about amalgamating. है ना? Receives shares from the amalgamated company, receives cash compensation only, receives tax liabilities, or receives no benefits. If they receive nothing, why would you give over your entire company for nothing? That is something which no business will do. So in this case, one thing is for sure, this doesn't happen, and if you receive cash compensation, then it is taxable under section 47 of Income Tax Act 1961. We just studied about that. So in this case, there was only one thing. You get shares. You had shares of company A. I am a shareholder of A. As soon as I came to know, now it is becoming AB. Now I am going to ask, what is going to happen? They'll say, nothing, ma'am. You earlier had shares of A now. You get shares of AB now. I said, that's it. They said, that's it. Whatever belonged to A now belongs to AB. All the shareholders have become a part of AB now, and we are fine with it. If I'm not getting any money, why would there be a tax? The tax comes when there is an income. Now there is no income, so there is no income tax. Next question. What is the specified period within which the amalgamation should be completed for tax benefits to be applied under section 42A? 3 years from approval, 2, 1 or 5. You get approval for amalgamation. After getting the approval, what would you do? Once you get the approval, within how much time? Everything has a stipulated period of time. It doesn't happen blindly. है ना? The time period within which this should be over is basically 2 years. Within 2 years. Within 2 years from the date of approval. Next question. When a company is liable to pay MAT. MAT is minimum alternate tax under section 115 JB of Income Tax Act ITA. Okay? Then they say if its book profits exceeds 15% of income, MAT is compulsorily applicable in terms of companies, but in case of individuals, this also exists in case of individuals, but only if you have more than 20 lakh rupees of your income. So MAT would be applicable on individuals, but there it is called AMT. In case of companies, we call it MAT, and in case of us or individuals, it is called AMT. What's this particular section? MAT says there are certain things which it will say is income, certain things which it will not allow, and it will calculate its own profit. One is under Income Tax Act, the calculation of tax is done as per the Income Tax Act normal provisions. That means for a company, the tax is at flat 30% of the income which they earn. Then according to they will consider certain incomes, they will disallow certain expenses. On the basis of that, there is another section, or that is called 115 JB, that is MAT, under which your amount of taxation would be different. Will it be 15% if the income tax payable is less than 15%, more than 15% if the reports of net loss is there? What would be the point? MAT is actually applicable when it is more than 15%. If its book profits exceeds 15% आएगा ना? If it's, oh yes, if its income tax payable is less than, this is the answer. Why is this answer? Let me tell you. I was telling you about this now, 13% and 15%. Sometimes what happens is the provisions, the incomes and the expenses, which this 15% portion considers, is different from this. So what can happen is, at times, once you consider the taxation under 30%, it can come out to be say 40,000. While the total different provisions, totally different answer in this area, if it comes out to be 50,000. Income tax says the more money comes, better it is. They will not fight ki nahi, this is the taxation policies that we have given. No, they will say more taxes here, find it there. That means in this case, they would say that if the income tax payable is less than 15% of its book value, then we would be looking forward towards MAT. Okay? The answer is B. Now comes the next point. What is the tax rate of MAT under section 15, 115 JB, 10, 15, 18.5 and 20? Hint, earlier it used to be 18.5 for companies. It is still there for individuals, but for companies it's no more there. We've just studied about it. It's just another question out of the question that we have created. It is 15%. Done, everyone? Chale? Okay, moving on to the next point. Answer is 15%. This is for companies, not for us. Next question, everyone. What aspect of the domestic merger and acquisition transactions might be covered under section 47 of the Income Tax Act in case of disputes? Now, there are tax disputes. Then what will happen? Compliance with accounting standards during the merger of process, treatment of goodwill in the books of amalgamated or demerged company, exemption related to the amalgamation and demerger as provided by the section 47 of the Income Tax Act. Acha, last portion is hidden. Just a moment. Visible right now? D. The legal structure of the resulting after merger, demerger or merger. In case of income tax disputes, what would we do? Legal structure is not our problem. Goodwill is again in terms of accounting. Accounting standards is something income tax doesn't talk about. The beauty of our laws and standards is nobody pokes their nose into someone else's matter. This is clarity which they have maintained. If this is your area, I am not going to intervene in your area at all. This is one thing that they have made sure. So in this case, they are worried about only the tax exemptions. Income Tax Act is not going to ask you about the accounting standards. Accounting standards are different in terms of the working, and they are given by ICAI, issued by MCA. So there are accounting standards and all is handled by them, while income tax is handled by the CBDT, that is Central Board of Direct Taxes. So the work is already defined. You do not poke nose into the other people matter, they won't poke their nose into your matter. So their matters have been clearly segregated. Okay, next point. In a domestic merger and acquisition, when might part consideration be paid to shareholders of the demerged company? When will you pay? When the demerged company is a non-profit organization, when the demerged company is a government company, it's a private company, when the demerged company's shareholders have a specific right to receive part consideration only. What would be the position when you will get a part consideration? See, what kind of company will never determine whether you will receive the part consideration or not. You cannot determine it just on the basis of the fact that there is a NBFC, there is a private company, there is a non-profit company. It has never specified this. There is no place in this particular book they will write that this is based upon this scenario. So there is only one answer, because they have written it in the contract that we will be receiving part consideration, and the portion which is received in cash, will it be taxable or not? The portion that we receive in cash, will it be taxable or not? The portion that we receive in cash is taxable. Done, everyone? Okay. So before I end this particular session, what did we do today? Let's talk about all of those things together. When we talk about mergers and acquisitions, they start with deal structuring is basically something which I would say is a spin-off of mergers and acquisitions. If you know about the mergers and acquisitions only, then you can understand this. In terms of amalgamation, what I do is, if I had a share of company A and I had 10,000 shares of company A, now I hold shares of company B. Okay, I'll be given similar amount. It might be 10,000, it might be that. It would be based upon similar amount. In case your assets that you would have got from A and the liabilities you have taken over is also there, if you have paid them more than the value of their assets and liabilities, that's because they had a goodwill in the market and you wanted to buy that company so desperately. You said this company had a particular goodwill or reputation in the market, I am ready to give that amount. So they are ready to give the goodwill. That was the point which was given in this particular option. So they can give it as a goodwill. Secondly, when we talk about the mergers and acquisitions, in terms of M&A, when they talk about these M&A, what are they doing? In terms of M&A, this case, if you get only and only shares, you didn't get a single penny. You earlier had shares, now you also have shares. Nothing is happening. If there is no movement of money, no income tax. Not regarded as a transfer under section 47. Okay? No income tax. The moment there is any part payment, that is where you attract income tax. And the moment the income tax is payable, this will be taxable. Done. So in this case, the answer will come out to be this. That it, in terms of part payment, it becomes taxable. Done, everyone? So this was a specific session for the era of deal structuring. It has just started. We're going to cover a lot of topics. This has got a lot of income tax provisions and all. So I think that becomes way better that we learn it through this manner. Acha. Now, if you haven't taken up any of our courses, what you can do is go to our website, that is www.adda247.com. Go on to the area of our JIB and CAIIB. Click on the area of JIB and CAIIB. In this area, go on to the area of CAIIB November. 2023. This is where you will find all our batches, the English medium batches here. Then the CAIIB Mahapack is also there. Under Mahapack, double validity is going on, 500 hours of online classes, 132 test series, 263 ebooks, 970 videos. Everything is available for you. What you need to do is you can take up any of these courses. It is available for 3 months. Then if you want it, then you can get it for 6 months. You will get it for another 6 months. That means you get it for 12 months. Then we have it for 12 plus 12. You buy it for 12 and you will get it for 24 months. Done? Done? So in this case, you just have to use the specific code exam 80 and you will get 81% off in this if you are going through our app. So this is available for you at 7367.40. So if you're looking forward to it, then kindly hurry up because this offer is definitely for a specific period only. This is our Mahapack, and in the Mahapack, what are you getting? All these things are already available. This includes multiple batches. That means the previous batches which had been done, the current batches which are going on, the future batches will also be available till the time you have the validity. Along with that, you not only get English medium, you also get bilingual. You're not only getting the regular classes, you're also getting all the 5 optional subjects, elective subjects. Along with the elective subjects, you are also getting our revision batches which would be coming up just after this. So there is no end to it when it comes to our Mahapack. It has got all these things, mega marathons, the Maha marathons as well as the mini marathons, everything available. Then doubt classes available. So whatever you would like to go through, everything is available here. That is, at the same time, practice papers there is also available. Along with that, every second and fourth Saturday, we will also be conducting the doubt sessions. So this means if you're looking forward to it, everything that you might be looking forward to is available in this area. Right? So this is all about the era of CAIIB. So if you're looking forward to it, check it out on our website or on our app for further details. Chaliye, that's it for the day, everyone. I'll be meeting you tomorrow for the next sessions. So if you're looking forward to it, then kindly hurry up. The November is just about to start. That means whenever in the next 15-20 days, the last month would be starting. And at the same time, in the end of this particular month, from November, the examinations are starting. So if you're looking forward to it, you should start your preparation as early as possible because the CAIIB syllabus is quite comprehensive. Right. Chaliye, that's it for the day, everyone. Thank you.